Hello and welcome to this very special coverage, a very special treat, if you will, that we have in store for our viewers. It's very rare that you hear from somebody who's got international acclaim out of the Indian shores. And it's even rare that you have two of them in the ET Now studios, giving all you viewers a chance to hear about their investing styles, their thoughts on the current world scenario, the market scenario, and lots more. They need no introduction. But Mohnish Pabrai, Guy Spier, thank you so much, gentlemen, for taking the time out and being us in our studios. I'm sure it's a treat for all of our viewers and for all of us here in the ET Now studios as well. Thank you so much.
Niraj, it's a treat for us to be in India, at least for me to be in India, I can tell you. So.
Yeah, so Mohnish has been here often, but Mohnish, welcome back to the city where you were born in. Has too much changed aside of the political parties?
Well, first of all, Niraj, pleasure to be here. But I think, in fact, every time I come to Mumbai, I see a lot of changes for the positive. And so I think this is a city that has a lot of challenges, but it's also the one city in India that can rise up to them. Okay. So it's great to be back and great to have been a Mumbaikar.
Okay, pat on our backs. I'm glad with that. So, Mohnish, I would have started off with the Indian markets, but let's talk about the mother market and talk about the recent issues first before we come to value investing as well. And what do you think of the kind of streak that the US markets are in? I mean, if I'm not wrong, there'll be a record streak if the US markets continue to rise for the next 2 or 3 days. And they are leading the global markets higher as well.
Yeah, and I don't spend much time thinking about that.
Okay.
So just a couple of data points. One is that while the US markets are at an all-time high, if you just go back maybe 17, 18 years, we're not that far off from the highs in, let's say, 2000 or so. So the annualized returns from then till now are still below long-term market averages. So if you just take a very long-term view, we're not kind of in unusual territory, if you will. But the second thing, probably more importantly, is that investors are better off just ignoring that. The name of the game is to focus on specific businesses and focus on businesses that you understand without trying to figure out what the market might do in the next month or the next quarter or the next year. So just the way I look at the indices and the markets is really, it's an irrelevant data point.
But Guy, just looking at the rally, I mean, all I'm trying to right now figure out is where do you guys think the world markets are headed without getting into 1 week or 1 month? But everybody had thoughts that if Trump comes in, there could be, some gyrations in the market. Doesn't seem like the US markets or the world markets are too bothered with that. In fact, they are celebrating what's happened over the last couple of months.
There was a gyration on the morning. So the morning that Trump was elected, I think the markets were down, I don't know by how much. And then they very quickly turned around. But some of the smartest guys that I know and close observers of the US markets and people who are very closely connected politically, they couldn't have figured it out. So I think that really what we really have to do is what Mohnish just said, is just ignore it completely and think of the next 30 years and know that over the next 30 years. But we observe the market very, very closely and we get surprised by the direction the market takes. Everybody was surprised by the Trump election. And so you just ignore it. The brain cells are wasted.
Fair call. But just wondering, if there are a couple of looming crises, if you think that they are, I mean, a lot of talk about how the French elections and if indeed the right-wing Le Pen comes in, then maybe we are looking at a sovereign debt crisis in the European region, so on and so forth. I mean, do you guys bother about these things right now?
I'll tell you one thing. Sorry, it's allied to that. Trump got elected, and one of the first things he did was that he got rid of TPP, the Trans-Pacific Partnership. And all us free traders threw our arms up in the air and said, oh my God, what's he doing? This is terrible. But I spoke to somebody from UNCTAD, free trade organization in Geneva. China took up the baton. And actually a lot of the free traders are saying that's a really good thing. It's no longer that the United States has to lead. The developing world now realize the benefits of free trade, and China and India and other countries can take up the baton. So often what we think is a disaster is not a disaster. There are all sorts of good things going on. And the same thing about those worries in Europe. I mean, yes, what's the probability, Mohnish, that there'll be a crisis in Europe over the next 10 years? 100%. but we shouldn't allow that to affect the way we invest.
Let's move on to a couple of things, Mohnish. Warren Buffett, the annual letter released yesterday. One of the first things that he's mentioned, and he's devoted, I think, 2 or 3 pages to this, is his take on his bet, the decade-long bet, saying that don't look at active fund management, look at passive funds, or look at active funds which charge less fees. My question to you is, Mohnish, do you think that aside of course, a few key money managers who are actually making serious money, investors could be better off betting on index funds? I mean, is that?
Yeah, I mean, I think index funds are a great way to go. And in fact, one of the great points Warren makes in his letter is that he said he's been talking about index funds and the benefits of index fund investing for a long time. But he says that the people who are rich and the people who have large amounts of money under management, institutions, endowments, pension funds, he made the point that they feel that they are entitled to superior service because they are at the upper echelons of the amount of assets they bring to bear. And there's a quote, Wall Street is a place where people who travel in Rolls Royces go to take advice from people who arrive in subways. And so the thing is that the rich believe you get what you pay for. And in the investing business, that is not at all true. You do not get what you pay for. And the ability for even a pretty smart investor to be able to forecast what an investment manager is likely to do in terms of performance relative to the index over the next 5, 10, or 15 years is not an easy thing to figure out. So for almost everyone, the best answer is the Nifty 50 index. Now, what's the basis points? Is it 7 basis points? If you wanted to index the Nifty 50, is it about 7 basis points?
8,
And here's the thing. No salesman who's going to show up at your doorstep going to say, please buy the Nifty 50. The only salesman who's going to say that is yours truly. Okay? Because I love your viewers. So the best thing that large institutional investors in India can do, mom and pop investors can do, is go into the Nifty 50 and do dollar cost averaging. The important thing is start saving early, always spend less than you earn, and just keep putting something away. And you'll be surprised, in a few decades, you'll be very rich.
And this is something that we're going to take up in a big way in the second half of this interaction as well. Sorry, guys.
But as Mohnish, I heard Mohnish saying something for your viewers, and I want to tell your viewers as well that it sounds easy. It never feels easy in the process. So I look back, I looked at, over the last 20 years, Mohnish is of a more optimistic nature. There's so many times when I've beaten myself up over how I felt about my investments. And then I look back and I say, actually, I didn't do so badly. It's okay. So, they won't necessarily, your viewers won't necessarily feel good doing it. You just need to keep doing it and trust the process.
Okay. So let me ask you, Guy. I read somewhere that you did mention that the idea right now is to try and, or at least a year ago, was to try and figure out how to buy those businesses which will go up 2x, 3x, 4x over the course of the next 3-4 years.
I learned that from Mohnish.
So, my question is, at the current market juncture, across the world, you guys invest across, are you guys looking for 3x, 4x ideas right now, or are you assigning more weightage to margin of safety, looking at the current market scenario?
Niraj, I sent Mohnish an idea recently. I had a conference in Switzerland, and I sent him an idea. And he said, and then you can ask Mohnish what he said. He said, if it's not a 3 or a 4x, I'm not interested.
No, I told him if it's not a 5x, don't waste my time. The conference is called Value X. I told him to rename it Value 5x. And there's an old Miller beer commercial. It tastes great and it's less filling. One of the things about investing is there is such a thing as a free lunch. So if you find companies that may go up 3 times or 5 times or 10 times, what probably is also the case is they are trading really cheap. And so they have a high margin of safety. So a high margin of safety comes with high returns. So we are not in a business where it's high risk, high return. If you follow value investing, this is a business which should be low risk and high return. And so there are 100,000 stocks around the world. Our job is to sit on our ass and do nothing for long periods of time. And every so often, there's something that's an anomaly or it's mispriced or people can't see it.
Right.
And that's when you step up and hit the ball for a 6.
Okay, so let me ask you, for the benefit of our viewers, Mohnish. I know that you like, everybody knows that you like airline stocks, certain airline stocks, auto stocks in the US. Have you looked at that sector in India? Because it's a growing sector.
Yeah, I have. And so to answer your question, when I invested in, let's say, for example, Fiat Chrysler, it's moved up a bit now, but it was trading at 1 times 2018 or 2019 earnings, PE01. I love PE01. I did take a look at some of
You don't get that in India.
so I looked at some of the Indian auto sector stocks, and maybe I missed it. Maybe you can educate me, Niraj. Were there any PE01s? Nope. Were there any PE05s?
Okay.
So
But you won't get that in India.
No, we would. Actually, in India, the thing is that it's a very robust market. We have more publicly traded companies in India than almost anywhere else in the world. And probably 90% of them are not followed by analysts. And 90% of them are sitting under $100 million market cap.
Right.
And that is the universe. That is the universe which has the potential to deliver huge return. That is also the universe that can get your head handed to you.
Right.
Right? So the issue is, like Charlie Munger says, why should it be easy to get rich?
Of course,
right?
It shouldn't be.
But the thing is that if you're willing to put your head down and do the work, if I were a small investor in India, I would put all my energy into looking at those small businesses and really tearing them apart and trying to find which ones are a diamond in the rough.
Okay.
That would be the game.
Would you look at airlines as well? And then, Guy, I have a couple of questions for you. But would you look at airlines in India as well, if at all? Because you study the sector so well.
Indian airlines have some similarities to the US airlines, and they have some differences. So one of the differences is that in India, for the airlines, it's actually a little bit better than the US because fuel is a bigger portion because your fares are lower. Fuel is a bigger portion of the pie than it is in the US. And one of the reasons for the bet on airlines in the US is that we are never going to see, for any sustained period of time, oil over $60. And in fact, we may not even see it for very much time over $50.
Right.
So in a way, it was a way to short OPEC, if you will. And so the US frackers,
right.
Thousands of them, are what are the swing producers now. It's not Saudi Arabia.
Sure.
And so one of the reasons why the airlines were attractive was that attribute that one of their largest costs is capped. In India, the dynamics are a little bit different, but I do believe that some of the low-cost carriers here, Indigo and such, are extremely well run, extremely well managed. They're not cheap.
Of course.
But it's good to keep on the radar.
Standard disclosure, these are not recommendations made by Mohnish Pabrai, just observations.
Yeah, I admire Indigo because it's run, one of the promoters used to be the CEO of US Airways, great operators, and they've done a great job. So the first part of the equation is there, which is it looks like a good business. The second part, is it at a good price? That's more in question.
I get your point. Now, Guy, if I just look at what you've done the last couple of years, investments that you've made, you're not shying away from commodity companies at all. Now, my question to you is, with the way commodity stocks and commodities by and large have moved up in all of 2016, do you think the cycle is now nearing a halt or a top, or do you think there's still some way? And any thoughts here?
It's true. Through getting to know Mohnish, I started to understand more about how one might value a commodities company. And in a certain sense, though, what I learned is not going to be helpful as an answer to your question, which is that you want to be in the one that has the lowest cost of production. Because the one that has the lowest cost of production is going to survive through all cycles. And I think that, again, almost all the important investing lessons I learned from Mohnish, if you have that, then the margin of safety is in the cost of production of the business, and you can be reasonably agnostic as to where the commodities are going. And to be honest, I really don't know, which is a kind of a Buffett-type question. I was just going back to finding 1P stocks. Mohnish could say that he doesn't like counting to 2 or 3. Counting to 1 is about the place where he wants to stop. But if you don't believe you can do it, then you're unlikely to find it. So I think that I've spent part of my investing life just believing that the only thing to buy is Nestle, Mohnish's favorite company. And if you believe, so we create universes for ourselves which actually aren't the universe. Every now and then I've done something different, like my decision to come to India 15 years ago was me breaking out of a self-imposed box. So many of the boxes are self-imposed, and you just have to start thinking, what box am I in, and what can I break out of to see the world in a different way?
Oh,
and I think that sub-$100 million market cap is a fantastic place to look.
Where you won't get this, Mohnish, though, is some consumer sectors in India. Now, I heard you recently speak somewhere that India, when you look at from the airplane, looks like it needs a paint job really badly. Now, but these are sectors that are not available cheap in India.
Yeah, sure.
So what does an average investor do?
So
they won't be sub 100 million as well, a lot of them.
Well, so recently I was talking to Charlie Munger, and he said that he had been a reader of Barron's, investment magazine for 50 years. And in 50 years of investing, reading Barron's, after 50 years, he made one investment that he found in Barron's. So that's 2,600 issues and probably at least 10 stock recommendations in each issue, something like 26,000 stock recommendations. So he let 25,999 go for 5 decades.
Wow.
And then what he did was he put a small portion, I think he found an anomaly, and put about 10 million or so into this auto parts company in 2001, made about 8x on it. So the 10 million became about 80 million in about 3 years. It went up another 3 times after that, but he'd sold. Then he gave the money to Li Lu, who manages some of the Munger money, and Li Lu converted it to about 500 million now. So in 2001, Mr. Munger, who was already a billionaire, takes a small bit of money, about 10 million, and makes this single bet based on 50 years of reading a newspaper. And that in the last 16 years is a 50 to 1. Yeah. 50 to 1, quite amazing. Yes. So now what are the lessons from there? The single most important skill that an investor can bring to bear is extreme patience. Right. So even though I talked about India needing a paint job, you need to be the kind of person who loves to watch paint dry. And so if you are a person who loves to watch paint dry, this is the business for you. Okay. So one needs to be a gentleman of leisure, right, reading all the time, and looking for anomalies. Sure. And the thing is, the anomalies may not show up in 2017 or 2018 or in 2019. But the idea is, if you study 4,000 businesses in India and you spend 5 or 10 years doing that, you've got enough time to do it. There's no time urgency. And then you make 3 or 4 bets. The chances are very high that you're going to end up with more money than you can ever consume.
Fair point.
I just want to give you another analogy, which I think you've used, Mohnish, is that I'm sure that there are you see wildlife programs of the bears on the salmon run. You have the young bears who are chasing around all over the place trying to catch a salmon. And then you have the old bear who just sits on the rock quietly and every now and then just nabs one. Okay. That's the one we want to aspire to be. So.
Do you think you can get that guy in the insurance sector in India? I mean, you obviously have looked at the space all across the world. India, it's a budding space in the sense that the companies are just about starting to get listed. But it's an underpenetrated market. Have you had any chance, either of you, to look at the insurance sector in India?
I think that what I would have to do in order to get a strong sense of that sector is to come and live here. Okay. And to spend 10 years getting to know the management teams. Wow. And because we know that the accounts are rarely going to reflect the actual liabilities in the insurance company. And what you're looking for is you're looking for a management team who regularly show less than they have and who are extremely modest. They always in their accounting, there's huge margin of safety in the accounting. In a certain way, it's going to be very hard to find that out unless you really sort of get to know them in a very deep way. So I think that is actually a way in which local Indian investors have an enormous advantage over somebody like me sitting in Zurich or somebody like Mohnish sitting in California.
Yeah, and I think probably a better question, I think, for an investor to ask is not which insurance company should I look at or invest in or so on. The better question is what company is a no-brainer, right?
right.
Not insurance or
Of
auto
course.
finance or whatever else.
Sure.
So the thing to do is the first question that any investor should ask themselves is,
Mohnish, I'm going to get to that, the
Yeah.
value investing masterclass.
Yeah,
for
that's
sure.
fine.
But I was just trying to figure out if, because you understand the space so well, do you
yeah,
like
so
that
I think
theme in India?
the insurance sector very rapidly growing in India. The best of breed players, multiple the book value. They may be, in retrospect, looking back 10 years, bargains today, but not obvious.
Not obvious.
And
Okay.
what we want is obvious bets.
Okay, let me ask you something then. You obviously understand technology like the back of your hand. Indian technology for years has been a model which is now starting to get a bit disrupted, and it's showing in the valuations. They've never traded at these cheap valuations for a really long time. Have you had a chance to look at that space?
So you're talking about like the Infosys of the world.
Yes.
Yeah, I mean, I think they may be viable, they may be, but they don't get to the point of no-brainers for me.
Okay.
What I'm saying is that I think one has to scratch one's head
Okay.
to say where is this headed in the next 5 or 10 years. We've got some genuine headwinds for the Indian outsourcers, especially the ones doing business in the US. I happen to agree with the Trump administration that the Indian outsourcers abuse the US H-1 visa program. So the H-1B visa program, in my opinion, should be expanded quite dramatically, and I think the administration hopefully will expand it.
Okay.
But it should be expanded not so much for providing lower salary jobs that the Indian outsourcers typically tend to do, but to get the best talent to stay in the US.
Okay.
Today what happens is that if you are of Indian origin and want to settle in the US through a H-1 program, it'll take you 10 or
Yeah.
15 years to get a green card. That is not the way to attract the best talent.
Right.
And so what the US needs to do is dramatically increase the number of Indians, the number of Chinese, the number of Filipinos that we take in, but we should be taking in the absolute best
Sure.
from these countries. And today the visa program is used very heavily by the Infosys and the TCS of the world. I like those companies.
Sure, of course.
But quite frankly, I would be with the Trump administration if they decided to tighten some regulations on that front. The flip side for them is that technology allows you to do a lot more work here that would have required sending
Right,
people
of
over.
course.
So it's not, I would not say it's a death blow
Right.
if something like that happens. I think it actually may give them some other benefits.
Okay.
And we are seeing some things come up. For example, Canada in Vancouver is setting up to be a big tech hub.
Sure.
And so it could be that, for example, they leverage Vancouver as a place and service a lot of US clients from there. So there are ways they can work around it. They can do it through Mexico and such.
Sure.
But in general, I would be a proponent of the Trump administration taking the 65,000, 85,000 H-1 cap to something like 500,000, but make it so it's the best in the world.
Got it.
Come and stay.
Okay. Guy, my last question on this part of the interaction is your India investments. I mean, you have had one. You haven't had too many post that. Are you on the prowl? Are you looking to increase your exposure to India? Do you like the Indian market?
I think that I know that the minds like mine and Mohnish are a dime a dozen in the United States and in Western Europe, and there are so many. I think the
You're being
markets
harsh
are
on yourself.
the markets are very heavily picked over, and there are an enormous number of people who are looking at even small cap companies, and I think it's extraordinarily hard to find things. I mean, I'll do the work, and then I'll understand why it's valued the way it's valued. So my realization is that there's an awful lot of people who are not willing to come to India, for example, and yeah, I'm certainly on the prowl. And I think that, it's very hard for us to see this kind of dynamic shifts that happen. India right now, probably even in self-perception, perceives itself to be sort of coming in the United States and Western Europe's footsteps. I don't know at what point it happens. It may not be in the next 5 years, but in 30 or 40 years, there will be Indian companies that are leaders that we're coming from the United States or from Western Europe to learn in India. And I actually think Infosys and Wipro too, that will be that way, that India can take enormous pride in. So on some level, I'm also coming here, and I think that it's a shame that I haven't been here more often. I think that, you know, this is the largest English-speaking country in the world. The legal and business system that used to run the world was the British, and then it became the United States, and eventually it'll be India. So in a certain way, it's kind of looking to learn about the world that I'll be living in the future. It'll feel more like India, I think. So,
music to the ears.
Yeah.
Thank you so much for this interaction, gentlemen. It's a pleasure having you.
Yeah.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.